All right. I am Melissa Vance. I am the president and CEO of the Wayne County Area Chamber of Commerce. And I think looking around the room, I know most of you were really pleased to have you with us today. Just to let you know, we are recording today's webinar so that if you want to go back and look at the slides later, or you want to share it with other people in your circle of influence, feel free to do so. We will be posting the recording afterward on our YouTube page, and we'll share that out so you all can see that as well. If you have questions, there is a chat box, and you can just click the chat button and type your question in the chat box, and we will be getting to the questions at the end of today's presentation. So we can move through the presentation and then we'll answer everyone's questions. Then, so feel free to type your questions in there, or if you have a need, you can message me privately, or you can put a message in there that everyone can see, and you can toggle that switch to let you know. All right, well, it is my pleasure to introduce to you Jennifer North from Brady Ware RKN in Richmond. She is a member of the Chamber Board of Directors, and we're really pleased to have her expertise and sharing some information with us today that you may have heard of but not know the details, or you may not even be aware that these things are elements that you can take advantage of, or should be taking advantage of and paying attention to. So at that, I am going to turn it over to Jennifer. I'll let you introduce yourself while I go ahead and pull up the slides.
Hello, everyone. Nice to see you. My name is Jennifer North. I'm from Richmond. I'm a proud Richmond High School Red Devil graduate. I went to Ball State University, and I came back to Richmond to start my career in public accounting. I actually started at Brady Ware, worked here several years, left, worked in my own firm for many more years, and then came back and joined Brady Ware again. So I'm back where I started. And I'm going to talk today about the Coronavirus Aid and Economic Security Act, which is called the CARES Act. A lot of information in here. This is probably the most fluid thing I've ever done in my entire accounting career. In the first few days, it was changing daily. Now I think we're still getting guidance daily on how to interpret, and we're still waiting on some clarification. So we can go ahead and get started. You can do the next slide.
Give me just a second. Let me see. Okay. Oh, there we go.
There we go. So we have to have our disclaimer on there. This is really just informational purposes. This is not your actual accounting or legal advice, because everybody's situation is a little bit different, and you need to consult with your tax advisor for guidance. And a lot of this, you need to consult with your banker if you decide to get some of these stimulus loans that are available. Like I said, I'm pretty sure everything I'm saying is accurate today, but everything is so fluid, it could change within the next few weeks. So as of April 30th, this is the way things are. So we can get started. The first thing, so we're going to go over several things today. We're going to talk about the SBA loans, the deferral of payroll taxes. We're going to talk about retention credits, business loss deductions, mandated pay leave, student loans, NOLs, interest expense, qualified improvement property, a little bit of changes on charitable contributions, and then I also have some information on the stimulus payments. So the next slide. Next. again, we'll talk about disaster loans. So the SBA came out, the first thing that came out were these disaster relief loans, where you can get these low interest rates, 3.75 for small businesses, 2.75 for nonprofits, 30-year loans, up to $2 million in assistance to help with just getting through this horrible period where we had, you know, some businesses actually have been thriving through this, but not so many have not been. So you were able to use these funds to help with revenue loss. So next slide. Then they said they were so overwhelmed with doing those loans, they said, okay, we're going to just grant anybody that applies for these, you can get this emergency $10,000 grant, which would be forgiven. So, but if you also got the PPP loan, then they changed the language that you probably weren't eligible for an emergency loan. And if you did get this $10,000 grant, your PPP loan had to be reduced by the amount of the $10,000. So next slide. I found all this information as of April 24th in the United States of America. They had done 1,192,000 advances for a total of $4.8 billion. Indiana, there were almost 15,000 for 65 million. And then the actual emergency disaster loans themselves, the top number is just the $10,000 item. The bottom number, the actual loans, they've done almost 39,000 for approximately 8 million. And in Indiana, they had 530 loans for around 1 million. So this money is out there. It really has been funneled out, and hopefully it's being helpful and people are using them. Next slide. This is the one that most people that I have done, I've only had a couple people do the emergency loans. The majority of my clients have done the PPP loan. So the PPP loan is the Paycheck Protection Loan. Everybody has the same terms. You're allowed to use the loan for payroll costs. 75% of it has to be for payroll costs, and then you are allowed to use the rest for interest, rent, and utilities. 8 weeks after the loan is made, you have to retain your compensation, and you do have to cap it at $100,000 per person. So you couldn't be this small business where each of you made $300,000 and get the loan to pay it. It's really geared more towards paying everyone who makes $100,000 or less. Next slide. So I'm sure you followed on the news. The first round of these were already gone within days. The second round, they did get more funding, and it is out there, and it's already, I think, 1/3 of the way gone. So if you are interested in doing one of these and you have not applied, please apply as soon as possible. I will say I'm very proud of our local banks, because they just locally, I know they have done close to $70 million in loans, which is pretty impressive for our size. And I know they've had a very, very high success rate at processing the loans. So it's a great time to work with I mean, I know the national banks have done well too, but I think the local banks are almost at 100% of having all loans go through. So it's been very, very good for our local area banks. And you can apply through any lender that is federally insured. You can apply through credit union, and you can also do it through Farm Credit as well. Next slide. All businesses are eligible for the loans as long as you have 500 or fewer employees. There are certain businesses that have more than 500 that there are little caveats. They can also qualify, but once again, you probably need to speak to your lender if you're on that borderline. Next. So they did, on some of those 500 or less, they did waive some affiliations for people in the hotel and food industry, and you can be, there were several in the franchises And there is a section on there that you do have to disclose if you are an affiliated ownership. And once again, that your banker could help you through those. I'm sure you all saw on the news how they came out with more regulations just Thursday of last week, that one of the things on the loan was that you had to say you had an economic need for the loan, and there was a lot of controversy about some of the large like private institutions that have huge endowment funds. They most likely were not eligible. So they did come out with new guidance and said you have until, I believe, May 7th to return your proceeds if you don't think you actually qualified for the loan. I doubt any of our local businesses have. I mean, I hope you do. It's wonderful if you do have giant endowments, but most likely our local businesses would qualify for this loan, because I'm sure almost all loans are going to be, if they're not already, they will be impacted by this in some way in the next few months. Next slide. To apply for the loan, you need to do the application, and it's really not it's probably the easiest loan application I've ever seen in my life. And the original verbiage said you all had until June 30th to apply, but if you are interested in doing this, I think you need to do it ASAP, because even the second round of these funds are going to run out. Next. So you just provide your lender. To get the loan, you need to provide your lender with your payroll documentation, which would be your internal payroll reports and your reports that you file with the IRS every quarter, your quarterly payroll tax returns, which are your 941s and your 944. And if you use a payroll company, they can apply all of your items to you. They can provide your items for you. So, like I said before, the program's open through June 30th. It's probably going to run out. I had a couple clients call me. They got a loan in the first round and they wanted to know if they could get a loan again when more money came out. It is one loan per federal ID number. Next slide. So these loans, they are specific. You can only use these funds for payroll costs, interest on your mortgage payments, rent, as long as you had a lease agreement in place before February 20th, and utilities. So payroll, that's fairly straightforward. It's your gross pay based on, except it's capped for anyone over $100,000. Your benefits also includes in your gross pay for like vacation, family leave, sick leave, whatnot. You also are allowed to pay the employer portion of the healthcare benefits that you pay on your employee's behalf, and retirement contributions you make on your employee's behalf. The only employment taxes that are allowed to be included in the payroll cost are state unemployment taxes that are paid by the employer. Next. Your loan can be 2.5 months worth of your average payroll cost from the last year. So the loan is forgiven over an 8-week period. So that little 0.5 month is where you'll get that additional funding to be used for your utilities and your mortgage and your rent payments. Okay, next slide. The loan will be forgiven as long as you use it for the previous items I talked about, the payroll costs, the mortgage interest, the rent, etc. So no more than 25% of the forgiven amount can be for payroll tax costs. The lender is going to disperse the loan within 10 days of you getting approval, and you have to start the clock the day you get the loan. And as long as you maintain your staff and your payroll, the loan will be forgiven. Now, I had a lot of people ask, well, what happens if I don't? You know, I may have some people not there, whatnot. It's forgiven pro rata. So there will be guidance come out with how you can do the pro rata calculation. Next slide. The loan is forgiven. You have to maintain your head count, and there will be more guidelines on that to tell you exactly how to do the head count. Sometimes we laugh because like only the government would issue billions and billions of dollars and not have the exact guidelines. But props to them, because their intent was to just to get the money out as fast as possible with a broad guideline. And then at the back end of the loan, when it comes to the compliance on the forgiveness, that's when you'll have to prove all this. So your loan forgiveness will be reduced if you decrease your wages by more than 25%. However, you have until June 30th to try and restore your full-time employment levels. So if you have some people out, like if you got the loan 2 weeks ago and you have some people out the last couple of weeks of April and the first couple of weeks of May, but they come back and you're back to full employment, it is the understanding that you should still be allowed to have the entire amount forgiven. Next slide. You will have to, the loan forgiveness piece will go through your lender that is servicing your loan. So if you got the loan through a local bank, that's who you're going to have to provide everything for the forgiveness. And you will have to have documentation to verify this. So you will have to have your payroll tax, your payroll records, including your second quarter payroll tax reports that you file. And we also suggest keeping all of your documentation on your mortgage payments. You're going to have to provide a lease if you have a rent payment, and you are allowed to do utilities. And that I read through the actual act, and it says electricity, gas, water, telephone, and internet qualifies for those utility obligations. You must certify that your documents are true and that you use the forgiveness amount to keep your employees. And then the lender has 60 days to go through all of your documentation you provide and determine whether or not you get full forgiveness or pro rata forgiveness. If it is not forgiven, the interest rate is 1%. It's deferred for the first 6 months that you have it. However, it's going to accrue interest. You just don't have to pay anything. And then next slide, please. It's will be due within 2 years of the disbursement. So let's say you didn't use all of your proceeds for payroll and you have a little bit left. You can go ahead and just pay it back at the end of that period, at the end of that 6-month period where you had no fees. And there are no prepayment penalties at all if you pay it off early. There's no collateral required and there's no personal guarantee. However, they do have if you use it for purposes other than the specific, and they're very specific about what it can be used for, you can have criminal charges for misusing the funds. So next slide, please. You just have to certify that you do have economic uncertainty, and that's why you made the loan. You have to promise that you're going to use it for payroll and everything else that I described earlier. So next slide. You do have to provide a certification that everything is true and that you did not defraud the funds in any way, and that the payroll records that you're submitting to your banker are identical to the payroll records that you submitted to the IRS. Okay, next slide. So now we can talk about the deferral of the payroll taxes. So at first, when this came out, there was a little bit of confusion that you could not do both. And then they came out with a little clarification that you are allowed to defer the employer match only of the Social Security taxes that's due between March 27th and December 31st with no penalties, no interest, no underpayment penalties, etc. But and I'll talk about this here in a minute. I have more slides about it. You can, if you get the PPP loan, you can only defer it up to the point that the loan is forgiven. So you can't defer it and get the PPP loan and wait for the entire time. If you did not get the PPP loan, you are eligible to defer the employer portion of the Social Security taxes. And half of it is due December 31st, 2021, and the other half would be due December 31st, 2022. We are cautioning people. I mean, these numbers end up being huge. So if you're going to defer them, we recommend you have a good, really good tracking system to make sure you don't just get yourself in a huge hole that you can't get out of when these giant payments are going to come due at the end of 2021 and 2022. Next slide. So if you got a PPP loan, you are allowed to defer the employer share of the Social Security through the date the lender issues the decision to forgive. So just for simplicity, let's pretend that you deferred $50,000 up to the date that they said you could defer the loan. So then that stops and you have to go back to paying your full amount of the payroll tax return. You can't defer it anymore. But that $50,000 that you did defer in that window is still, it's split in two, and half of that would be due on December 31st, 2021, and the other half would be due December 31st, 2022. Okay, next slide. Then there's also the employee retention credits. Next slide. So this is another one that you can get a retention credit up to $5,000 for an employee if you keep your employee. And this credit is, you're allowed to use that credit to offset your total payroll tax deposit. However, you cannot take the PPP loan and the employee retention credit at the same time. And a lot of people say, you know, well, how do I know which one's better? How do I know what's the better one to use? Well, the PPP loan is completely forgiven if you use it in accordance with what you're allowed, which is what I talked about before, the payroll and the utilities and the rent, etc. So in my mind, it's like that's basically it's free money to pay your payroll for 8 weeks. So you would really have to sit down and do a calculation, but I can't imagine very many scenarios where you would be better off to not take the PPP money. Okay, next slide. Okay, now we're going to talk about other items that they put in the act that really has nothing to do with the loans or the payroll taxes. So under the Tax Credit and Jobs Act that came out a couple years ago, when most of that stuff went into effect at the end of 2018 and 2019, they had some things in there to disallow excess business losses. So they have repealed all that, and that's gone now, but because you are allowed to take those business losses. They lifted that limitation for 18, 19, and 20, and then they do go back in 21 and through 26. So next slide. Mandated pay leave. Next slide. There is information in there about, there's extra, I lied, I'm sorry, I do have more about payroll tax credits. There are things in there that say you can take paid sick leave if you have COVID symptoms, and I believe at this point now you have to have a medical diagnosis for it. Next slide. You can take 2 weeks of paid leave at 2/3 of your employer rate because you are unable to work with a bona fide need to care for an individual or to care for a child whose child care is closed, or if you're sick yourself. So my best source I have found for this, you can go on the Department of Labor website and they have a frequently asked questions, and it has really good guidance on this and who you have to provide it for and what exactly qualifies. This really isn't my area of expertise. I know more on the tax side, but on these, one of our people said they suggested we talk to a labor attorney. Well, how many of us really have those that we use regularly around here? So I did find the Department of Labor website was a very good source for some of these. Okay, next slide. Next slide. Oh, this is the next slide. Sorry, I'm sorry, go back. There are, they did create what's called the Expanded Family and Medical Leave Act, which is a little different than the regular Leave Act that we've had in the past. that does allow up to 10 weeks of pay. But once again, there's a lot of specifics that you have to meet for those guidelines. And I recommend either finding a labor attorney or using the frequently asked questions on the Department of Labor website. Next page, student loans. This was a good one. And this one, didn't even know people did this, but employers are allowed to pay student loans on behalf of their employees. However, it has historically has always been treated as compensation to the employee, because you're really just doing it's a benefit. So they did put an item in the act that says employers can make payments up to $5,250 towards student loans tax-free to their employees through the end of this year. I don't know if any of our employers around here really do this, but this is a great bonus for someone that, hey, then this is kind of like a bonus without being taxed on it. I'm going to go ahead and give you $5,000 to pay towards your student loan, and you don't have to pay tax on it. Next page. They also suspended monthly payments and reduced the interest to 0% through September 30th. So for that window, it won't accrue any interest for federally held student loans. So of course I see that language and I'm like, well, how do you know if your loan is federally held or not? And they did say you can go on the your website where you originally got the loan, and if the Department of Education is listed as the lender, then it does qualify as federally held. Okay, net operating losses. This was another big deal. So a few years ago, excuse me, they took away net operating losses that were allowed to be carried back. So if you had a business, or this was business and individuals, if you had, let's just say in 2018 and 2019, you had really, really good, strong years. And then in 2020, you're going to have a loss because of the impact from this virus. Historically, a long time ago, you used to be allowed to carry back. Then they took that away, which meant if you had a loss in 2020, you were allowed to carry that forward to future years to offset income in future years. Well, now they repealed that, and you can carry back again to 5 years. So in 2020, if you have a $100,000 loss in your business or on your personal return, and in 2019, you had $200,000 of income, you're allowed to carry that $100,000 back to the year before, which would reduce your income, and then you get a refund of the taxes that you had to pay in. So this is a really big deal for those people, businesses, and individuals who are going to have much lower income into the loss situation for 2020. Okay, next slide. They also had a rule that came out a few years ago where they said, okay, even we're not going to let you carry back losses, but you can carry them forward. But even when you carry it forward, we're only going to let you use 80% of that NOL to offset income in the future. So they removed all that also. So if you do have a carry forward, you are allowed to use 100% of that loss in years 18, 19, and 20. In 21, it reverts back to being back at the 80% again. Next slide. Interest expense. Next slide. This is another one that didn't really pertain to a lot of my clients, but a couple of years ago, they reduced, if your interest expense was more than 30% of your taxable income, they did not let you deduct all of the interest. You had to carry it forward for future years. So they, with this act, they repealed that also, and that has gone away for 19 and 20. Next page. This was a big deal too. This is a qualified improvement property. Next page. I'm sure some of you are familiar with Section 179. That's the ability to depreciate a piece of equipment or, and sometimes property, in the first year that you purchase it. Well, they made these regulations, they've changed a bunch of regulations when they came out with the Tax Credit and Jobs Act a couple years ago, and they inadvertently left out the language that allowed 15-year property be eligible for bonus depreciation in Section 179. It was a clerical error, and it made it go back to you had to do it over the life of the property, which would have been 15 years you had to depreciate it over. So they used this opportunity to fix that in the CARES Act. And so now 15-year property is eligible for bonus and Section 179, and they made it retroactive to 2018. So if you had a lot of this property that you were not eligible to take the depreciation on in 2018, you can amend your return and fix that, or you can correct it on the 2019 return going forward. Next page. Charitable contributions. This is another good one. So the CARES Act also expanded charitable contributions, the deductions. So a couple years ago, they changed the standard deduction and they raised it. So a lot of people, unless you itemize, you don't get to take any charitable contributions anymore. So they put a caveat in there where now, even if you don't itemize, you are allowed to take a $300 deduction, what they call above the line. There also has been a limitation where you are not allowed to contribute more than 50% of your adjusted gross income. Now, for 2020, they completely did away with that. So if you had income of 100,000 and you did a charitable contribution of 100,000, that's allowed. In previous years, it was limited to 50% and had to carry forward. Corporations have historically not been allowed to give away more than 10% of their bottom line, and now they are allowed to give up to 25%. So these are good changes for charitable organizations out there. We just have to hope that people have enough income to still give. Next page. Okay, and then there's a few other provisions I have to throw out here. We have AMT credits are back eligible again. The federal tax deadlines have been extended to July 15th. Indiana followed suit, and they are also due in July. So one of the weird things for federal, if you had an amount due April 15th with your 2019 tax return, that's due in July. The quarter estimate is due July, it would have been due April 15th. Your estimates for 2020, that's due July 15th. The second quarter estimate is also due July 15th. On Indiana, April amount due, first quarter estimate is due July 15th. But the second quarter estimate, which historically is always due on June 15th, Indiana still made that due on June 15th. So technically your second quarter estimate is due on June 15th, and your first quarter estimate won't be due until July 15th. So IRS had it like that in the beginning too, and then they came out a couple weeks later and changed it to make all of them due July 15th. But so far, Indiana has not followed suit yet. Another little blurb I wanted to say about the SBA, if you had a current SBA loan with your business, they have deferred all payments for the next 6 months. This is supposed to be happening automatically, but if you do have an SBA loan and your deferral did not start, you need to contact your lender ASAP to get that waiver going. Property taxes in Indiana. Our wonderful governor did the executive order that mandates all counties waive penalties for any property tax payment that it can be made 60 days after May 11th. So they didn't really come out like the IRS did and go ahead and say, hey, now your property taxes aren't due until July. They just said, we want you to pay it still when they're due, but if you don't, please, we can't charge you any late fees for paying them late. And that actually is supposed to say May 10th. I don't know why that says May 11th. Oh, it is the 11th. The 10th is on a Sunday. So they are due May 11th, I guess. So they didn't really technically say it's extended, but they can't charge you any delinquent fees for not paying them. Now, there is a one other caveat. I should have put this on here. If your, well, I did say non-escrow. If your real estate taxes for your home are in escrow with your bank, those are still due May 11th. So the waiver only applies for non-escrowed property tax payments. And then just on Friday of last week, all businesses are required to file personal property tax returns, and they were leaving that up to the local assessors whether or not they were going to allow extensions. And so many local assessors in the state of Indiana were not going to allow them, or were requiring written requests for them, that the governor stepped in and went ahead and said, okay, we're just going to, across the board, all personal property tax filings are now due June 15th of 2020. Okay, next slide. Oh, good. So I have a couple other things that I ran out, I forgot to put in my slides that I want to cover real quick. I thought you might find this interesting. As of April 16th, for the PPP loan, they had completely used the entire $350 million. There were 1,661,000 applicants, and the average loan ended up being around $207,000. And I also wanted to talk about stimulus payments. If you, everyone, not everyone, eligible people could get $1,200 per person as an economic stimulus payment, and you can also get $500 per child as long as your child was under 17 on December 31st. These payments were phased out if you were married and made between $150,000 and $198,000 combined. Your payment was phased out to zero. If you're above 198, you get nothing. If you're single, your phase out was between 75,000 and 99,000. And so if you were above 99,000, you didn't get anything. However, if that's based on the ones they mailed out right now, which were based on either your 2018 or your 2019 return. So if you hadn't filed your 2019 return yet, and you in 2019 made more money than you did in 2018, then you probably got more money as a stimulus than you would have had you filed your 19 return yet. If you were not eligible for the payment because you made too much money in 18 or 19, but in 2020 your income is going to be down substantially because of the impact of this, you are allowed to get the credit for it on your 2020 return. You can only take that credit if you did not get it already previously in this mass distribution that they're doing right now. I've had tons and tons of questions on this, and I have found the IRS website has another frequently asked questions page, which has been very informational. It explains, what if I didn't have direct deposit? How can I do? What do I do? And, what if I owe back taxes? Do I still get it? And I thought the answer on that was interesting. If you do have back taxes, you still get the stimulus payment, only offset if you have past due child support. You can't get it. But if you owe back taxes to the IRS, you still get the stimulus. So I had a lot of questions. What if I got it for my child, but then he turned 17 in 2019. Do I have to pay it back? So far, everything that in the regulations so far state, if they send you too much, then there is no method yet of how to pay it back. And they make it sound like there probably won't be. If you got paid too much, just consider yourself lucky and you got too much. If you didn't get enough, though, you can correct that on your 2020 tax return. There is no language out there that says if you got too much, you have to pay it back on your 2020. It only says if you didn't get enough, you can claim it on your 2020 return. So I do think that's everything I have now. My email was up there. If you have any questions, please give me a call. I would be happy. And I can take questions right now if we have any questions.
All right, I am typing your email address into the chat bar right now
Okay.
for those that may not have gotten it down. We do have a couple questions, and if you haven't had a chance to do so yet and you do have a question, now's the time to type it in the chat box and we'll get to it in just a moment. Melinda asked, as a sole proprietor, I am the only employee. Therefore, I figure my AGI at tax time. My 2019 taxes are not completed. Can I use my AGI from 2018 on PPP? Also, every time I try to access EIDL, it states no new applications are being accepted.
Okay, first of all, I'm not sure what that meant at the end when you try to access. They are still doing PPP loans. I actually talked to I talked to someone from West End earlier this week, and I know they were still accepting them. And I know First Bank was still accepting them, and the SBA is still processing them. So I'm not sure who your banker is, but you should contact your banker, and because I know they were trying to only do loans for their clients first, and they should be able to help you. So the regulations.
I think they were two questions. The first one was on PPP, and the second one was on EIDL, the economic.
Oh, okay, I got you now. I'm sorry. Yeah. So on the PPP loan, it says if you don't have your 2019 return prepared yet, you are allowed to give your estimate of what you think the 2019 return will be. So if you have just like a summary of your income that you can provide your banker to show you. And my suggestion also was to take a copy of your 2018 return, because a lot of times it's pretty similar year over year. So if you have the copy of the 2018 Schedule C and you have a summary of what 2019 is, my understanding with the bankers is that's enough. So there's that. The other loan, I did see the same thing, that their website was down for a while. I thought I saw it was going to be back up, but I think what happened is they started with that fund, and then they shifted so much focus to the PPP that they didn't really get back to the EIDL. And they also might have cut that off for a while because they did not process for so long, because they were focused on PPP. They were afraid they were going to run out of funds. So they probably need a couple weeks to catch up on processing that to determine if they have any funds left to even do any more of those loans. But hopefully you should be eligible for PPP and you can get that one. Did that answer the question?
I believe so. Melinda, if not, let us know. Okay, the next question, if we did not hear back from the EIDL loan application, should we reapply?
Did you get it depends if you didn't get a PPP. If you didn't get a PPP loan, then I would say yes, you should reapply. If you did get a PPP loan, you need to talk to your lender to see what you're eligible for to have both.
Very good, thank you. Okay, the next one. What happens with children between the age of 20 and 26 that you are able to claim on your taxes and they had income?
Yeah, that's sad. I have two of those in my home myself. So what happens is my kids are college students, so they did not have enough money to file independent. They were claimed by me on their tax return. And that age group of people get nothing, which is sadly, they're college kids. They need it a lot. But the only way you're eligible for it, if you're in that age group, would be if you filed on your own and your parents did not claim you as a dependent. Okay. So what my suggestion, well, I don't even know if it'll work, but my son is going to graduate this week. Yay, go Purdue grad. But he will make enough money in 2020 to claim himself. So then on his 2020 return, he can say, you know, I never got the PPP, no one got it on my behalf. So he will be eligible to get it on his 2020 return. So if anybody has kids out there that are, you know, I mean, if you're in school, it's really hard to be able to claim yourself because most people in school don't make enough money to claim themselves. But if you have enough income that to justify claiming yourself, you know, that you're providing over more than half of your support, then it's definitely in their benefit to claim themselves in 2020 and go ahead and say they never got the money and get it.
Okay, the next question, do you know if anyone in Richmond is able to assist with making adjustments to the 2019 tax return? And what about assistance with filing a 2018 tax return?
Oh, I'm sure any tax preparer in town could do both of those. Anyone that prepares taxes has the ability to amend and to file the current ones.
Yeah, and we highly recommend Jennifer. The next question, the funds ran out for the Chamber of Commerce grant. Will they open up for applications again? That's a good question, Tammy. The U.S. Chamber, they ran out so fast. I actually think they were out within a couple hours of opening it up, or less. And I am not sure if they'll open it back up. They have not said anything about that. It was funded through large corporations like Vistaprint and some others. And so unless more corporations step up and make contributions to the U.S. Chamber Foundation, my guess is that that opportunity will be gone. Okay. It doesn't look like there are any other questions, so I will let you know that if you get off of here and you think of a question later, feel free to email Jennifer at the email address that we put in the chat box, or email the chamber and we'll be sure to get the answer for you. Jennifer, thank you so much for your time. Your expertise is invaluable. All of these things are, it's just so much to digest and to understand when you're trying to run a business too. And so thank you for looking out for our
Absolutely. I hope I was able to answer everyone's questions. I know it's a lot of information I threw at you. I tried to touch on a little bit of everything. So if anybody has any questions, please feel free to contact me.
Fantastic.
Thank you all.
Have a great day.
You too. Thank you.